We're talking the Lightning Network today on Bitcoin Season 2. Is it a failure? Is it a success? Is it somewhere in between? There's probably a lot that you don't actually know about the Lightning Network. So I've got Matt Kimmell swapping in for Colin today on Bitcoin Season 2 Writers Room. Bitcoin Season 2 is brought to you by Arch Network, the platform for building bridgeless apps on Bitcoin. More on Arch later on in the show. Let's kick it off. Okay, I'm here with Matt Kimmell. Welcome to Bitcoin Season 2, Matt. Thanks for swapping in for Colin.
Super happy to be here. Thanks for having me. I love the intro to the show, by the way. I don't know if I've ever told that to you, but
it's a banger. It's a banger intro. One of the nice parts about being like a part-time like music guy like I am is that I can find pretty sick beats for a podcast. Basically, I need to like start 10 more podcasts so I can have all like cool like B-roll audio in the background. But that's enough about that. People don't know who you are. You are a regular on the other Blockspace media. You're in the extended Blockspace universe. And I've got you in because Colin is AFK today. And we were chatting before this and we want to talk about the Lightning Network. And well, you're kind of like an analyst on other Bitcoin stuff. You've done your tour of duty in the Lightning Network R&D game. And I think it's a good time to reflect as we look to maybe a soft fork happening in 2025, to like reflect on like one of the biggest narratives in Bitcoin, which is the Lightning Network, and maybe do some evaluation of where it stands today and how it got here. So you and I are going to we each brought a little bit to the table. We've done a little bit of due diligence, but I think I'm going to toss it to you to like maybe give us some context. Where do you want to start? Do you want to start with like what even is the Lightning Network? How do you explain it? Okay, how about this one? Have you done the thing where you see explain it to a first grader, a fifth grader, and a high school student? Have you seen those types of maybe explain the Lightning Network to like a grade school student, and then maybe explain it in a more like advanced way?
I will do my best. I'll say, so I think there's two really good analogies that help give you an understanding of the Lightning Network. And I think the first is just high level concept of a bit of its purpose. And that's the bar tab, right? And this, like, by the way, these are totally unoriginal to me. These have been around in Lightning discussions for a long time, but I'm going to totally repurpose them. And so the deal with the bar tab, right, is that you can continuously go back to purchase new, cocktails or beer.
I get drunker and drunker the more the Lightning channel stays open.
Throughout the evening, you can continuously receive goods from the bartender, and you just get an incremental tab throughout that they keep adding to. And then at the end of your night, when you are, as Charlie put it, good and drunk,
and they're ready to go home,
you're ready to very wisely call an Uber and go home. You settle up. And so you make many different payments throughout, but you delay the ultimate settlement of those payments. And that is kind of like the, I think, overarching idea of Lightning. You can kind of net out a series of payments over time and delay the actual transaction where money finally switches hands. And so the Lightning Network is where kind of back and forth those incremental payments go. And then the base blockchain, actual Bitcoin final settlement transaction is that final one. I'll take it one step further. And the next analogy that I think helps like structurally help you understand what the Lightning Network is that ancient calculator, the abacus.
Ooh, this is my favorite analogy. Yeah.
Right. And so how the Lightning Network is kind of structured under the hood is a series of payment channels. And so if we use the bar analogy, you're basically creating a payment channel, that relationship you have with the bartender. And so the way the abacus actually works as an analogy to this is that you kind of pre-fund those beads on top of the wire that go back and forth. So there's one transaction that actually puts how much funds are in this channel onto this wire. And then you slide the beads back and forth as payments as you go. And just like the bar tab, kind of at the end, you would close out finally this wire where you've put beads back and forth. You've had this relationship between the bartender or say me and you. And eventually you end up in a place where if we had, maybe 10 to start, maybe at the end of our series of trades, you have 9 and I have 1 bead. And then we finally close out onto the Bitcoin blockchain at the end of it. And so that's how structurally you could think of a payment channel. And the Lightning Network as a whole, the beauty of it is that you can have a bunch of wired beads stack up between me and you and Alice and Bob, and so you actually get a network of these abacusi.
I actually like to bring in one of my favorite OG analogies from the 2000s when Senator Ted Stevens of Alaska was asked to describe the internet. And he described the internet as a series of tubes. I don't know if you remember this famous line. And I actually think it's kind of funny because in Ted Stevens' mind, the way the internet works, it's all these like tubes connected together. That's actually kind of how the Lightning Network is. You've got all these channels, like each with Bitcoin inside of them. They're all linked together. And then you can send little bits of Bitcoin smaller than a Satoshi back and forth. But you have to have, a route through those tubes, through those channels to get from, point A to point B if you want to pay someone who you're not directly linked with. So do you think that's at least a good foundation to understand maybe the basics of what the Lightning Network looks, how it works?
I hope the viewer thinks so. I certainly think so. But as you said, I've been, we've both been in this space for a long time. And so Lightning, it was one of the first papers I wrote about to the professional, investment community when I got the job I'm currently in.
And that was back in, 4 or 5 years ago, I think, because the Lightning Network kind of came into actual use in 2020 and 2021, I think, was when it started, you started actually seeing Lightning apps rolled out. But the actual concept for Lightning goes back much further. In fact, it goes back to the original publishing of the white paper, which was 2015. So we're actually over a decade since the initial publication of the Lightning Network paper from Thaddeus Dryja and Joseph Poon, both uncommon and unique names. And I think it might help to give us some history of how we got here, because a lot of discussion on the Lightning Network lacks probably the historical context, so that people know that it's not we got to sit here and design how the Lightning Network looks imperfect on day one, or rather a lot of its actual topology is downstream of this evolution of the protocol, kind of like Bitcoin and kind of like other protocols themselves. I'm going to toss it to you to try to tackle a concise, history lesson of Lightning.
I was kind of growing up with Lightning in my early stages of joining the Bitcoin community. And so what I remember kind of in the early days for me, when I was just getting excited about what this new money system could be, was the topic that was discussed about the most was scaling. And we still get a lot of scaling discussions today, but there was a lot of contention around the block size, right? And that really flowed into, what are the mechanisms and the processes to change the protocol rules. But the kind of main dispute of, maybe how the protocol should change or why it should change in the future was because of scaling. And Lightning came about in that time in 2015. And I'm going to read a little bit of a quote here because I think it was in the Lightning white paper. And I think it really is the essence of the purpose of why it was originally created. And so it reads, the Bitcoin blockchain holds great promise for distributed ledgers, but as a payment platform by itself cannot cover the world's commerce anytime in the near future. And so the idea is that we have these capacity constraints, right? We have a limited block size. We have, if you're pushing up against those constraints, a free market that could determine really high fees potentially for that block space. And so we need some kind of outlet. If we're actually going to service the world's goods and services as a monetary system, how are we going to grow this thing? And I'm going to push aside all of the actual arguments from that time.
Yeah.
There's so many.
We can't go on the block side. We can only think about Lightning because otherwise this is,
We'll go all
We're talking to Bitcoin season 3, basically. Yeah.
But the idea, right, was this idea of deferred settlement and the fact that you could lock up funds into a payment channel and do exactly what we talked about at the beginning, the analogy, and not create a new blockchain very specifically, because a lot of discussions around layer 2s today are actually just wholly new blockchain systems. But this is
I also want to put a pin in that and say Lightning is not another blockchain. A lot of the other scaling solutions for other chains is just another glorified blockchain. And that's expressly what Lightning is not. It is not another blockchain.
It's very much an extension of Bitcoin. Really, it's just using Bitcoin transactions, and those that have opted into the Lightning Network have just opted into a new set of rules and able to organize themselves in different relationships such that they can defer settlement later. And there's some really nifty stuff, under the hood that happens there. But the purpose, right, again, was we want the world's commerce on a Bitcoin monetary system. How do we do it? We do that with this layered scaling network called Lightning, where we can have instant payments that deliver in a cheap fashion, right? And that eventually we can still take advantage of all of the properties of Bitcoin that we know and love and have final settlement later on. And that's how we're going to do it. Now, do you want to pause and add any input there, or should I progress through history?
Yeah, I will say, we're not going to talk about specifically the block size war, but it's important to note that in 15 and 16, as the block size war in Bitcoin was heating up and was at least technically, or at least at the fork happened in 17. Lightning was kind of weaving in and out of the conversation here, where it began to often be a quick quip back to the block size increasors, such as what became Bitcoin Cash, as we're going to scale with things like Lightning. We want it to make it easy to run a node. We don't want to commit to an unknown amount of future block size increases. That's why Lightning itself, these Spillman style payment channels are this is a great example of what we can do. And so this was mainly kind of in the technical community at the time. I think I was not really involved actively in the technical discussion at the time, but I think it was mainly talked about in the technical community. And it wasn't really until maybe 18, 19 that Lightning then crossed the Rubicon into kind of at the same time, it seemed to enter into the mainstream discussion as the Bitcoin podcast movement kicked off. And you've got some interesting perspectives on this. So I'll pause there. I brought us up to 18 or 19. Ooh, I will say one more thing. Lightning required a few soft forks in order to work. In particular, specifically, I believe it required 3, one in 2015 regarding transaction malleability, one in another in 2016, which added check sequence verify and check lock time verify, which allow, the relative based time locking that you need to set up the HCLCs. and then SegWit, the famous SegWit fork, where it solved a transaction malleability issue. So you can't have like a transaction which can be, you need transactions to not be this type of malleable in order for a Lightning channel to work properly. So it was interesting because we had a lot of like technical consensus among the developer community at the time that, okay, this is something we're going to do. And so we saw it pretty, I don't want to say easy, but it was like you had 3 relatively sequential soft forks that happened year after year after year, 15 through 17. And they were pretty clearly like, done to enable Lightning on Bitcoin.
Yeah, it's a good point. And I recall check sequence verify being a very big deal at the time. And transaction malleability was a brain breaker, a very technical thing.
I don't really understand it. I'm just summarizing what the other experts say. I don't really personally understand transaction malleability that much. So that's about as far as I can comment on that topic.
Well, we'll leave that to a more developer focused podcast. But I will say, if you are an emerging developer, you should probably look into Bitcoin++, but you should definitely go through the changes that happened kind of in the era of 2015 to 17 and enhance your understanding of Bitcoin transactions and script, because it was a really happening time that is still very relevant today. Okay, so we now have the soft forks. We have essentially made it through the block size wars. Bitcoin Cash has forked off. They've opted into larger blocks, which is basically to say the capacity constraints of a block size they've increased. Bitcoin Core has done their own, version of a block size increase with SegWit, but also enabled all of the soft forks in the meantime necessary so that we have Lightning, right? Which again, the white paper came out in 2015 and actually became, a functional thing, at least to my understanding, as far as something that you can opt into in 2018.
Okay. I think there were some like early tests, like channel demonstrations or something, but like what we call the Lightning Network was like still kind of this building, ramping up thing, as far as I understand.
Yeah, it was a fun time when it first dropped. There was like parties, Zoom.
There was like a pizza transaction equivalent for the Lightning Network. I don't know if you remember that. Like similar to how Laszlo, did the first payment, bought pizzas on Bitcoin. You had like a pizza day for Lightning where people bought the first transaction on Lightning was for pizza. And so it was a whole thing.
Oh yeah. It was fun. I remember, sending a Lightning payment and then like counting like 1, 2, 3, waiting for someone's phone right next to me for it to be complete and be like, oh my gosh, it's so fast. Anyway, right. This is again, like Bitcoin early days stuff. It's always, or when a new thing happens, it's always a tech enthusiast type of thing. And as far as like culture and community goes.
Yeah.
All right. So the Lightning Network, launches, there are, no exchanges on it. It is very much so tech enthusiasts, kind of early wallets trying to come about to enable people to use it. But you kind of had to know what you're doing with your node to join and be a part of it. Well, okay, let's fast forward a couple years, because in the 2021-2020 time range, the what I would say is like the purpose of Lightning was kind of in full swing, full belief, where people were using it for instantaneous payments. There was a lot more liquidity that added onto the network, like a lot. You had Umbrel come out and make it much more accessible to basically run a node and to run some version of
that's what I did. I set up an Umbrel Lightning node. I set up an Umbrel Lightning node, and I was like, I set up a Lightning node. It was really easy. They made it point click, boom, boom, boom. Now I wasn't managing my channel's liquidity, but I never really used it. So it was more of a novelty, got to check it off my list type of thing.
the community that wasn't as technical could now basically have this plug and play node that you could get onboarded to the network. And so if you look back at that time, the public Lightning network capacity and the node connections really took off. And then you had things like Bitcoin Beach, right, start to be more in the news and in the media and grow as something. And then, of course, eventually we get El Salvador legal tender, which is like kind of the climax of that era. They rolled out with, you might have to remind me because it's slipping my brain right now, the wallet Chivo
wallet,
right?
yeah. 2.7 million El Salvadorians on Lightning was like the big brand.
Yeah, absolutely.
And you had Twitter integrate payments directly into Twitter, which are now no longer active.
Yeah, you had different providers teaming up with like big companies. I remember the McDonald's Lightning transactions where the videos were everywhere. People were going to El Salvador strictly to use Lightning down there. I remember Jack Mallers made big announcements with Strike, right? He did media down there, going around talking to people. There was interviews. There was so much excitement about the future of Bitcoin, its potential and scaling. And a lot of that centered around the promise of the Lightning Network. Now, at the same time, and this is all my opinion, right? I'm just speaking from the heart.
This is writer room. This is editorialized. This is opinions. Opinions welcome. Bring your opinions to the podcast. This is what it is.
So at the same time, a popular concept being pushed around was Web3. Okay. And Web3 is all about taking your identity back on the internet. It's about taking ownership of your data. These companies are spying on us. They're deplatforming us. How can I move things kind of more client side and have this next evolution of the internet that is more individually empowered? Okay. That concept, I think, really came into the Lightning ethos and discussion at the time. I remember specifically an unlock for me and kind of a big article I remember reading. I believe Ryan Gentry wrote it at Lightning Labs, where he talked about how on the base Bitcoin layer, address reuse is a big no-no, right, for privacy purposes. Basically, when you're going to receive a transaction or really do anything, you should be, using new addresses such that you can kind of protect your privacy throughout your usage journey of the system for many different reasons that you can find a lot of information online. But on Lightning, as you have a kind of node, right, ID, there is a persistence of your identity. You're not going to create new addresses every time and kind of create this new identity. You have a persistent node ID that you're going to continuously using throughout your journey. You have to be live. There has to be uptime on Lightning. Maybe we get into a bit of
we can get into that
challenges later. But one of the main things with Lightning is that unlike the base layer, you need to be online to receive payments. Okay, so if you have a persistent identity online, you could theoretically have some kind of authentication logic about that. So just like how you log in with Google, right? I could now log in with Lightning. I could log in with my Lightning node identity, and this was something that honestly was a contrast to what was going on in the Ethereum Solana alt chain world, right? Where there was also a lot of, kind of dunking on each other online. We're better than you.
Yeah.
Because they had Wallet Connect and kind of these browser wallets where you could log in, and that was like a big narrative marketing push was Web3 in that world. And so you have this log in with Lightning type of idea going around, this persistent identity on this another layer. And then also I remember an unlock for me was seeing that in, I think it was LND, in a payment, there was a custom record field where you could put arbitrary data, kind of like op return is on the base layer. I think you could put, and like TVL messages, type link value messages. And so there was apps that started to roll out and take advantage of some of these features. Sphinx chat was a big one. I remember in Austin,
this is one of
part of a community on Sphinx and sending messages and payments. And then there was
podcasting 3.0 because like you could stream sats while you listened, and you could also chat over it because the chats were lightning messages. It was really, really cool. And I don't even know if it's still like service today. Regardless, like this was a very optimistic time for Lightning in the ecosystem. And it was like the inverse, like the Bitcoin equivalent response to Web3. It was like everything that Web3 wanted to be. And you even actually saw Jack Dorsey's Square come out with like Web 5 as a joke, but also serious response. In contrast to this, like we're going to capture this Lightning Web 3 invert movement, and we're going to do like a Web 5 thing with it. And that was like a really optimistic time. And it was elevated by this kind of weird hybrid of like, really technical folks who would kind of poke their heads up and talk on the, now like skyrocketing Bitcoin podcast meta scene of like less technical to entirely non-technical folks. So it's kind of this interesting like narrative like flywheel almost, I think, for what Lightning is. Let me tell you about one of the most slept on opportunities in crypto. Arch is building fast, composable DeFi apps on Bitcoin. Arch apps tap into the OG blockchain with by far the most liquidity and best brand in crypto. I've known the team for over a year. The tech they're building is solid, and they are racing towards mainnet. There's dexes like Saturn, meme coins on FunkyBit.fun, instant loans on Cha-Ching, and so much more. Plus, they're rewarding testnet users. So join me in trying out Arch while it's still early.
So it was an exciting time where apps were kind of startup-y apps were coming online on Lightning. You could use them, and they were, financially related. They were socially related, different kinds of digital services. And so there was like a new kind of idea that was kind of beyond the initial purpose and a lot of the white paper of strictly payments, right? And payments for really a lot of the white paper talked about enterprise and business type of payments and use cases that were theorized, to now you had kind of emerging use cases that people were like, okay, beyond the original purpose, there's this potential, there's this promise that I myself now have the accessibility tools to come online Lightning. I can use payments in a self-sovereign way. I could even use applications on top of this.
Yeah. And it was all private.
Web
that 2. Was the other thing, is like it was a huge privacy unlock too, because unless you control all the nodes in the Lightning Network, you don't know where the payments are going. It's like really, it's theoretically much more private. I think that is actually one thing that that Lightning does actually still accomplish in many dimensions. Is that it's like much easier to envision a private payment future.
Yeah, no shared ledger, right? No blockchain.
Yeah.
It's payment channels. And so, and there is a lot of the Lightning, and my theory, there is still a lot of the Lightning Network that is private, right? Private channels. That's not public as far as, when you go and look at the stats of capacity and node count. There's a part of the Lightning Network you will not be able to do unless you really, really try and kind of use heuristics and assumptions.
Yeah.
Okay, so should we continue the
history? So okay. This is going to be a little bit longer podcast, because I think we're only just now giving like context so that we can now reflect on the state of Lightning, and we're going and this is again opinionated and also not completely informed. Like it's really hard to be like an expert on all the things Lightning and make sweeping evaluations, but we're gonna let's try to like reflect and identify some of the things the Lightning Network has been really successful at, and some and failures, and maybe things which are both. And then maybe we can like leave it with well, what are ways it can be improved, or like where do we go from here? But how about let's start with successes, because I think that's always a fun, more optimistic one. I think the first success is that Lightning works. That I think it's underappreciated how important it is to have anything that is a technical success in these distributed systems. It still feels a bit marvelous to me that we have a thing called Bitcoin and that it works. To have Lightning Network live today is pretty successful. So I would say it is a strict technical success and that it's operational. You can string together Spillman payment channels and create a network that we call Lightning. I would also say that we saw a lot of venture flood into the scene. And while the user growth projection numbers are not at all what they were maybe a few years ago, the numbers are that Binance now supports Lightning withdrawals. Coinbase, I think, too. Most of the major exchanges. You have entire sovereign countries releasing wallets with Lightning integration. Now, whether El Salvadorians actually use the Lightning integration of Chivo, not super clear, but like these are things that have happened. And you have major apps like Cash App with native Lightning integration, and you can pay with Lightning from Cash App. This is a big, big deal. And I will say I've used Lightning as a gamer, like Minecraft servers or like other video game like Rust servers. Shout out Orange Rust server, to do micropayments in game for really fun hobbyist things. So I've had a lot of fun and touch points with Lightning over the years, and my own Bitcoin meetup uses Lightning regularly within the meetup. Every month there's multiple people who at the meetup do little exchanges in Lightning, and we've been doing that for years. So this is a fun kind of feature that exists with Bitcoin that I see being used decently. And I think, didn't Trump use Lightning to pay for a burger?
Yep.
Yeah. You had the president of the United States use Lightning Network on camera, and it was a modest success. But
yeah,
there's some big
payment went through.
It went through. Took a little while. The invoice expired and they had to wait a little bit and had to reissue it. But it happened. These are big wins, I would say.
Yeah, I think the main thing for me is that it continues to function. That there was basically a design with, these incentives baked into it and theories, but now actually in practice, you have payments circulating that settle basically instantly and very cheaply. You have full businesses supported by routing, right? I think that's the main thing. The incentives of the systems works. It is another layer that is functional on top of Bitcoin that serves its original purpose. And so that's the main one, right?
Yeah, it works. That's a success.
Another success is that there's actually been growth. Now, it may not be the growth that people of the kind of 2020, 2021 era may have hoped for, but I'm going to shout out River, who does a report, it seems like annually, but their most recent one about Bitcoin adoption just came out maybe a month ago. And what they basically showed is while the network capacity and kind of channel count has remained stagnant or even gone down a little bit, that the actual volume of payments in dollar terms has risen quite a bit. And so I think the interesting thing about that, right, is that, it's becoming more capital efficient, I guess, in some ways. But there are also exchanges that have really onboarded. And one of the main reasons in their initial white paper for why something like this would be really beneficial is because at the time, a lot of people were parking capital, Bitcoin capital on exchanges, trying to take advantage of market opportunities, because you don't want to wait for these 2 to 3 block confirmations of, 10-minute times and such like that. And so rather on the Lightning Network, you can really instantly deposit withdrawal. And so I think that there are some positive statistics that map growth of the system. The fact that it has remained relevant and worked is a success. There has also been, development as far as the spec has evolved. Now there's controversy around whether, it has evolved according to, in the correct path. I guess it's opinionated and controversial around what is included, what isn't included, of course. But it has evolved, and there's been, dual funded channels and multipath payments and, some exciting kind of steps that improve what you're capable of doing on the Lightning Network. I'm just going to keep riffing here. Nostr is, an absolute win with Zaps
it is
integrating with the Lightning Network. And that's where I think a lot of that Web3 kind of momentum migrated to, was that space of, actually like these the apps like being natively integrated into Lightning Network. But maybe that was a bit of a far-fetched idea. But in this kind of accompanying system that can plug in, it seems to work a lot better. And there's, many apps and kind of a community that is trying to develop okay, I'm going to go back a little bit to what we were talking about before. There was an idea of Twitter integrated payments, right? Which you mentioned. The idea was, do we have Lightning basically integrate into the existing suite of the world of apps that we use, like Twitter? Or do we try to take this idea of a new internet and build a new Twitter on top of Lightning, right? Do we want more Bitcoin native digital services in this ecosystem rather than adapting what's already existing in society? And the people that were in the camp of, we want a new society, I think a lot of that flowed into Nostr, right? And I think that I would claim that as a success, right? Taproot assets, potentially having dollars on the Lightning Network. I mean, we can evolve this in any direction you want to go, Charlie.
So but there's multiple dimensions that you can consider Lightning a success. And I would say, I would make the statement that Lightning is a technical success, and it's had successful adoption. But is Lightning the optimism that I initially discovered Lightning with, maybe in 19 and 20, is definitely not there. And you are seeing huge developer attrition in the Lightning space. You are seeing a lot of disillusionment from non-hardcore users. I would say outside the Nostr user world, the Lightning experience is pretty uninteresting and lackluster. And you haven't really seen much of the, I would say, someone needs to do a whole research piece on this about has a lot of the investment into the Lightning ecosystem actually returned? I look at, if you remember the European payments app Bottle Pay back in the day, it was sold to, I believe, Galaxy Digital for, guess what valuation? $300 million. Now that was in certain stock guarantees, but can you imagine there being an actual, can you imagine valuation of any of these Lightning companies, or any of these Lightning apps at anywhere near that today? These seem like very far off, distant things. Now, I'm not saying they can't happen, but if the most compelling use case for real scaled Lightning adoption is a stable coin, the stable coin company Tether coming in and putting a stable coin on top of an asset protocol on Lightning, if that's the whole purpose of it, then or that's the main compelling use case 10 years into Lightning, then Like, is that really this cypherpunk future that we want? And then I'll also say this, like I mentioned my meetup, my local Bitcoin meetup, where we pay with Lightning all the time. We do an annual event every Christmas where we do an exchange where we pay for, you bring a thing and you see exchange it for Bitcoin. We prefer to use Lightning apps. I went over the past 4 years of this exchange of the path of my slide to explain how to quickly download a Lightning wallet, fund it, and pay for it over the past 4 years. Every single year I've had to change which wallet I recommended. And as of today, not a single wallet that I've ever recommended is available to US citizens. And that would be Blue Wallet, Wallet Satoshi, Phoenix, Gitmash, and Mutiny.
Yeah.
Those are the wallets that I've always recommended to people. And I look and I say, how am I ever, and even today, it's still a chore to onboard a lot of people to Lightning in a way that makes sense for them. And that's still very difficult. Now it's difficult to do it with kind of anything in crypto still, but this is not the Lightning that I thought would exist in the Lightning user experience I thought would exist in 2025. And yet here we are. So, this is it, it feels to me, kind of, if you told 2020 Charlie that this is where we'd be today, then I'd be disappointed in Lightning. Yet I still use Lightning, multiple times a week, even to this day. I still use Lightning today. Small payments to a handful of select people, usually locally.
Hey, this is Will with Blockspace Media. And I don't know if you heard, but we just announced the second edition of our conference series, Op Next, now to be held at the MicroStrategy HQ in Tysons, Virginia.
That's right. After the success of our first scaling conference at Fidelity last fall, we're doing it again this spring, April 11th and 12th at the MicroStrategy HQ. I'm really excited for the programming. We have various stakeholders, industry, developers, and Bitcoin miners present.
So join us in April for open, neutral, and honest conversation about the leading proposals and technical solutions that will scale Bitcoin to the next billion users. No booths, no tokens, no shills, just Bitcoin and honest conversation.
You can find tickets and more information at opnext.dev or click below in the show notes.
Yeah, I'll give my disappointments too. And I guess what I'll say before I say that is I still think of Lightning as an early technology. And I think if you have a 1,000-year view of Bitcoin, right, you even think of Bitcoin as an early technology. And so context and your opinions certainly matter here. But what I would say that the original purpose of Lightning is in the process of being fulfilled, and it's serving that function. I do think that there's probably a strong disappointment. Really, people are feeling probably pretty jaded in the 2020-21 onboarding experience for what Lightning is today. Because the biggest disappointment, right, I think, is the user experience. It's the fact that you have to, liquidity management is a major challenge. Liquidity management, consistent uptime, right, experiencing failed payments, that is a bad user experience, and you got to want it. And I think that is part of what comes into this. What is the purpose? What is the promise discussion? Because if the original vision is this is really an enterprise thing, and the experience on Lightning in a self-sovereign way really is kind of built for enterprises, less the sovereign individual.
Self-sovereign enterprise.
Yeah, you would see that as a success. But if you're kind of thinking it as, oh no, I was promised in my period of onboarding to Lightning that it would be a self-sovereign experience and that it would be more convenient, then I think you're massively disappointed, because the reality of Lightning today is it's basically custodial. You have a custodial wallet, and that's how you interact with payments on the system, whether you're using apps or not. Now, you made a point on a lot of Lightning companies shutting down, and I'm going to get to what you said about the dollar on Lightning via Taproot assets, but I'm gonna kind of come through it through this lens, because I think the nature of Bitcoin startups is so difficult. And I think Lightning has been impacted by that because it was a strong venture sector of kind of opportunity in the previous cycle. Seeing wallets kind of sunset is very disappointing as someone that has also recommended Lightning to so many people and said, hey, you should give this a try. It is super cool. How to monetize a wallet startup is clearly a major challenge, clearly, right? And when we look at the Bitcoin startup space in general, it's hard to name a successful Bitcoin native startup that isn't in trading, that isn't in some kind of market activity. I can name a few, and here's like what I think the existential challenge is that your clientele, your base of users that you really want to market to and use your the service is the people that most understand Bitcoin's potential as an asset. And so we're living in this period where, okay, money's converged to one, and Bitcoin's the best money that's ever been invented. And so my greatest incentive is to accumulate as much Bitcoin as possible in the interim. And basically, I will be enriched through that process. Do I want to spend my Bitcoin? No. I want to spend whatever fiat I have in my country. Well, that makes it such that, okay, the market-based buy and sell startups do really well. Some of the savings-based startups have done decently well. I'm thinking about the collaborative custody folks and stuff like that. But the ones that are dependent on commerce and spending, I think have struggled, and that's impacted the Lightning experience. Where the dollar comes into play, stablecoin on Lightning, I think is that I've always held the contention that one of Lightning's biggest problems is that you do have to spend Bitcoin on it the entire time. And the last thing I want to do is part with my sats. If I can spend, stablecoin and get that integrated into the regular financial framework, I could potentially really be unbanked. And that could potentially help, Lightning bootstrap more liquidity and enter a next stage of evolution. I know that's a controversial opinion,
but that's a good counter take. Like that is like the optimist, the two guys on the bus. That's the guy looking into the beautiful sunny, mountains that tethers on Lightning versus the guy who's staring at the rock wall into the darkness that there's tether on Lightning. It's like, two views on the same topic.
Yeah, and I still think the purpose, right, is partly to scale Bitcoin payments. I just think it's really early overall in the evolution of Bitcoin adoption, right, to get to the point where people actually want to spend and make a lot of payments and kind of live off of Bitcoin as their main reserve asset. You're so incentivized until the point where it's the reserve asset to save it, right, and to spend whatever else is your currency that's available, right? Let Gresham's law play out, as they like to say.
I'll interject here. One of I think what is a seminal piece on Lightning, I would say kind of interesting, like disillusionment era for Lightning developers. There's a seminal piece by Ben Carman, one of the co-founders of Mutiny Wallet, a cool ass wallet, but it is now discontinued. He is now, just get ahead of it, he now works for the Taproot Wizards. But he published this in summer of 23, and I'll read a couple select excerpts from it, where he's talking about some of the challenges with Lightning and a couple suggestions for how it could be improved. But he said, first and foremost, one of the hardest UX challenges of Lightning is channel liquidity. To make matters worse, there aren't any practical hacks we can do to get around this. The better solution is just-in-time liquidity like we do at Mutiny, or splicing like it's done in Phoenix. Those solutions abstract some of it away, but they don't do it enough. The fact is, channel liquidity is not a usable UX for most end users. Another part, he says, is the other major pain point of Lightning is, as you said, Matt, the offline receive problem. So you got to be online if you want to receive a payment. There's technically an ongoing spec proposal to be able to work around this, essentially create a notification system, but it doesn't solve the fundamental problem. It still has limitations. yada, yada, yada. He says this is further exacerbated by things like Lightning addresses, that require a web server to even get an invoice in the first place. So he talks about this, and he talks about how, so he puts forward these challenges. And we saw that after this piece, he continued to find it difficult to build this. It was really a kind of a crown jewel like application and team in the Lightning space. Mutiny Wallet, cool team, cool builders, cool guys. But he viewed the maybe the right decision to then try to advocate for certain soft forks, which would improve Lightning and help address some of these challenges which he describes. Now, whether or not those are the ones which are ones we should do or not, we don't have to get into. But like, there are certain like structural challenges with the way Lightning exists today, which make it almost infeasible for anyone but large node operators or enterprises who make it their full-time business to like operate a Lightning node. It's very difficult for the end user UX.
Yeah, big fan of the former Mutiny Wallet team. Yeah, something I remember reading this post, and I think something that stood out to me is Ben kind of also goes through all of the UX challenges that come about when there's high transaction fees on the base chain, which really complicate the Lightning experience. And it's probably a chat for potentially another day with somebody like really into the weeds. But it becomes uneconomical for a self-sovereign user in a lot of use cases when transaction fees spike really high. Now, Ben talks about, I think, the idea that a lot of covenants, if a certain suite of, proposals get like ushered into a soft fork at the same time, or like certain ones or another, you could have the idea of shared custody of a UTXO, but of a Lightning channel, right? You can have the idea of a channel factory.
You can spit a bunch out. One UTXO, 1,000 Lightning channels bloom.
Right. And so, you can have this experience on Lightning where you can really come in as a user on with any amount of money. It'd be economical for you to use it, and you still get the assurances and the properties of the system without needing to trust a third-party custodian in that respect. And so I am definitely empathetic, honestly, to that view. There is a lot of soft fork discussion. You are at a media company that is going to put on a
part
conference
of what we do.
About the whole thing.
We're talking our own bags here.
I see. Not to again play both sides on Lightning is it a success or disappointment, but on the soft fork argument, to me it's like, yes, Lightning, for it to serve global commerce, I think requires some soft fork changes, right? It requires some of the ideas that Ben put forth in that piece. On the other side of the camp, on the kind of ossifier perspective, right? Theoretical solution to the problem of, if 1 billion people are trying to open open Lightning channels, right? And there's not enough, block space. It will take X amount of time. This is such a problem, this theoretical issue, and trying to solve that with, practically a soft fork seems a bit silly given the, reality that the mempool cleared literally like a week ago, right? And so it is like a theoretical, or a solution to a theoretical issue as it currently states. That being said, if Lightning is going to be the end all, like if you do believe in layered scaling and it is the end all be all network, and we are going to have this system of Bitcoin native digital services that eventually emerge, right? So we're not in a world where there is a Bitcoin reserve currency system and then still using all of the services and conglomerate of countries and governments that, for lack of a better phrase, kind of spy on us and have all of our information. if there's going to be this alternative world, in addition to Bitcoin being a reserve currency, which I think, a lot of people kind of seek that privacy and have that opinion in the Bitcoin space, there likely are to be, soft forks. That being said, if you have that 1,000-year view where, you think of Bitcoin as an early system and you think of Lightning as potentially not the correct L2 kind of long term, and that there are other potential, market driven incentives that can come about in other types of L2 systems that may be the long term solution. Well, if you have that view, then you probably think, well, let's wait on a soft fork and not put anything necessarily in and see what ideas we come up with down the line. So I know this is a Lightning discussion, and yes, Lightning is at the heart of a lot of soft fork talks, but I guess just, weighing in on the proposals and the ideas at play there, I really do see both sides of that coin.
Yeah, I see a lot. And we haven't even gotten into, I had a good conversation with Alex B about ARC. And I've seen some other discussion on this where you can use an ARC as a way to kind of solve some of these last mile payment solutions that you've encountered with Lightning. You can solve some of these channel balancing issues. But again, I don't see this implemented anywhere. Again, some of these conversations do sound a little bit like Lightning sounded years ago. It's funny because now I think about, I appreciate personally the, being skeptical of the promises of some of these, new ideas, which say, oh, we can revolutionize all these things, because, I wonder, I'm like, okay, is it going to follow similar path as Lightning, where we get it online, it works in some ways, but it's not this totally new world of everything's solved. And maybe this is just a general life lesson for anything, especially things in tech. But, with Lightning fresh on my memory, I'm does this hot new thing, which somebody just invented the other day, is this actually going to solve all our problems, or is it going to is it going to solve some of them and create some new ones, or we're going to maybe reach some limits without some further development? I would say this to the listener: we had 3 Lightning soft forks. Why should we have a 4th? If this is an ongoing project that we're improving, then are these systems ever perfect? And if you think they are, then I question your sanity. And I think we should try to be improving these systems. I think Lightning can be improved significantly. That's my position. It's a success, and it can be even more of a success if we simply want to make it one.
Yeah, I remember when everyone was super excited about Liquid, and think about how much that's right. And people are very excited about ARC and Fetty and stuff like that right now. And you when you read about some of the things that they potentially could do, it sounds very promising. Lightning is, I think, far and away the most successful attempt at scaling.
Agreed.
Bitcoin, right. I think it is. I think you've been kind of scarred by promises if you don't consider it a success. And that to me is very clear. Whether we should have a soft fork to enhance the experience, because I think while that is true from a success standpoint, I think also, if you've been in the space, you would certainly agree that there are UX challenges that make it a bit of a disappointment in other areas. And I think that's part of the reason why there's a movement for soft forks. And I think if you want, those soft forks for that future of Bitcoin native digital services, I'm empathetic to that view. I think you also need to consider that some of the solutions that you're going for, is there enough of an immediate need for that? And you need to also acknowledge that there are unintended consequences that come about with soft forks. And I'm going to add one more thing too, is that there's always been kind of a narrative that, soft forks are backwards compatible. We think of soft forks and hard forks as very different things, as we should. But I kind of disagree with the contention nowadays that softforks are this super backwards compatible thing that you never have to adopt. Because as we've seen with Bitcoin Core in the last couple of years, there's been some pretty significant vulnerabilities and bugs disclosed that have been patched in newer versions. But you can't just kind of take on those couple commits to your old pre-softforks node. So you either accept that you're going to have your node and your coins out there in this vulnerable state, or you have to elect to update, right? So I don't want to get into a whole nother side discussion. Well, actually I do, but I know we don't have time for it. But there's just so much to consider in a soft fork scenario, and I wanted to kind of put that claim out there too.
Yeah, this is why I have you on, Matt, because we blew through an hour, and I feel like I didn't get through half the things I'd written down on my scratch sheet about Lightning that I wanted to say, and that's why we do this, because as long as there are going to be Bitcoiners around, there's going to be debate about what Bitcoin should look like, and that means there will always be podcasts and forums to discuss these things. And we are going to touch on this regularly. Maybe you and I do a River Report equivalent annually about the state of the Lightning Network and associated topics. So maybe that becomes a recurring theme of Bitcoin Season 2 going forwards. Any last thoughts on our conversation to wrap this up?
That'd be fun. I think River does a great job. So shout out to them. I'll plant my flag on Lightning as a success and sign off on this podcast.
Sweet. I will also continue using Lightning week in, week out, whether I like it or not. And you, the listener, can be a judge of whether that's a success. So thank you so much for listening to Bitcoin Season 2. I'm Charlie, and we got Matt Kimmell. Matt, where do people find you on social media?
I'm at BC1Matt on Twitter. You can, or X, find me there.
Cool. Peace.